You got the U.S. 30-year Treasury yields to start with, and it's going just up. Just looks like it's just taking a little rocket ship ride here. What's going on with the 30-year?
Yeah, more bonds talk today. Like I said last week, and I've said it a bunch on Twitter. If you want to understand why Bitcoin's trading like it is, look at equities. And if you want to understand why equities are trading like they are, you have to look at credit. You have to look at the bond market. Where everyone's talking about the inflation prints, and really the biggest impact is in the bond market. So we see the 30-year Treasury, but really the entire Treasury curve bending upwards. Just today, just before we came on, actually, 30-year Treasury broke above 300 basis points, 3%. And so I think there's a trend, a secular trend, which I show in the next chart of the 10-year, and kind of this lower high pattern that we've seen basically for the last 4 decades. And so it's getting very, very, very close to a lot of these to really a break in trend of this lower high pattern. And there's a whole lot of debt out there that, needs to be rolled over. This is how our monetary system works. And so when yields spike like this, not only is the value of these bonds getting marked to market lower, but at the same time, the financing cost for all of this debt, the hundreds of trillions of dollars of debt in the global economy, is rising rapidly. So there's a lot of interesting stuff happening.
What is the issue with the breaking of the trend? If that occurs, what are the ramifications or impact in your opinion?
Yeah, so I mean, essentially, just to kind of say it again, I think the point needs to be hammered home that all of this debt in the system, all of this money supply, money is debt in this system. Money is created through lending, and it's destroyed through debt default or repayment. And so when debt has to be rolled over, like all debt has to be rolled over, the U.S. government's $30 trillion in debt, and they're consistently running higher and higher deficits. They fund themselves through tax receipts, but increasingly it's through debt, and they were relying in 2020 and 2021 on the Federal Reserve to monetize that debt. The Fed's saying inflation's running hot, we got to step out of the market, and now it's entirely up to the market and up to investors to basically to fund the U.S. government, and it's through that Treasury issuance. And so with these yields rising, it's getting a lot more expensive for the Treasury and really everyone else from the corporate world, the individual investors, to say mortgage rates to finance this debt. And so we're not starting to see the kind of second order implications of this, which is really just kind of a balance sheet crunch. But I think that's to come. And I think that's the biggest story of 2022 so far.
Yeah, it's fascinating to watch this happen. You've got this chart here with gold over global bonds. And again, rising very rapidly. What is this telling you?
Yeah. So why am I talking about gold? Why am I talking about bonds? The Bitcoin analyst, I think really what we see here, this is a multi-decade chart. It's a trend of hard money outperforming soft money, right? We have fiat denominated bond markets selling off in a rapid fashion. And I have the total Vanguard total bond market index in the chart after this that we can show. But essentially gold, hard money, it's been hard money for millennia against fiat denominated bonds. What's this chart show when we see the trend really breaking a huge decade-long cup and handle pattern? Well, it's showing that hard money is outperforming soft money. And so I also like to look at, say, like Bitcoin versus gold, which is the hardest money against hard money, which is consolidating. But I think this trend, this broad trend of hard money outperforming soft money, and I have later in the chart, we can go over this, but it's USD versus JPY, the Japanese yen. The dollar is almost like the cleanest of the dirty shirts. And so while we see bonds selling off, while we see the dollar really depreciating against real goods and services, we see stuff like gold. And I think eventually, in my opinion, Bitcoin, which is consolidating right now, going to outperform in a big, big way over the coming decade.
Hey, you, did you like this video? Great. We make 5 of them a day and post them here on this channel. Make sure you're subscribed, like the video, and see you next time.